What's up, guys? Welcome to the Fit to Flourish podcast. Today, I'm going to be talking about how to get in and out of trades. This is going to be very general. So, for beginners, it's going to show you how to get into trades, where to get into trades, and how to get out of trades, and how to kind of size in and kind of take off contracts. And we're talking about options here, or if you get stocks, we're talking about equities too. So, equities and derivatives. So, let's get right into it. So the first thing that I wanted to show you guys is getting in and out. So this is a old style that I used to use to get in and out of trades. You need to make a system or a set of rules for getting into trades. You need to understand what your risk to reward ratio is going to be. So I was always looking for a 3-to-1 risk to reward ratio, as you could see here. And I wanted at least a 50% win rate. And then what you need to do is calculate how much that win rate will get you with the risk to reward. So you always need to break down that calculation. So let's get into some of the basic rules that we need to know. So before getting in the trade, you need 2 to 3 signs of confirmation. So 2 to 3 signals showing that the trade is going to go into your in your direction. So for all of these examples, I'm going to show going long, which means buying calls, or you're thinking that the stock is going to go up. So you're buying stocks thinking it's going to go up, or you're buying option contracts, calls, thinking that the stock is going to go up. So all these examples are going to be going long. So you need 2 to 3 signs of confirmation. So for calls, or buying a stock, you'd be looking for a big green bar. You'd be looking for the trade at a critical level, and this is for puts as well. So if you think the stock's going down, you need to look for these kind of signs, like you think that we're going to be trading at a critical level, or we are trading at a critical level, or at a signal point. Selling pressure is increasing or decreasing. There's big news or big events. And then the time is 10 a.m. or 11 a.m., which are reversal times if you're day trading. And then you want to grade the trade. So we just had a video previously that shows you how to grade trades and how to get into trades, mark up the charts. So you need to be able to identify if your trade setup is A+ setup, or B+ setup, a C- or a D. Like, you don't want to take it at all. You need to grade the trade. And based on the grade of the trade and the grade of the setup that you see, and how many signs that you see that the trade is likely to go in your direction, then you're going to want to pick the size that you want to wager. So the amount of money that you put on, so the lot size, or the port size that you're going to put on, is going to be based on the grade of the trade. And guess what? We do not gamble, okay? If you want to gamble, just go to Vegas and have fun, because trading, it's really about discipline and growth. It's about putting on sound trades based on a system that you set up that has a great risk to reward, okay? When we're trading, we're always managing risk. That is the name of the game. We're trying to defend our money, and we only give our money to the market in times where everything is looking pretty good, okay? And then the questions that you want to ask before getting into trades, this is critical. So the first thing you want to do is you want to say, what kind of bar is this? Am I really going to get into this trade? What is the pattern? Is this a strong trend? What is the time in the day in this trade? What is the overall trend? So you might want to do what's called higher time frame analysis, where you go to the weekly time frame, the daily time frame, 4 hour, 2 hour, then 1 hour, and then find your exact trade based on what the overall trend was on those higher time frames. It's called higher time frame analysis. And then what markers are we near? Are we by support? Because if we're by support, then we have a bigger reward to our risk. So we're risking to that support area, that small area, and then our reward is higher. So for example, let me go to the charts here. If we know that we have support down here, then we might want to get in like right over here somewhere. And this is just a fake example, okay? So there's no good signals down here at the bottom, but let's say, roll, this is a pretty good signal bar right here. This is a big green bar. Big green bar, we know we have buyers below because of this massive wick. We actually just formed a double bottom here. So if you want to take this trade, you want to put on a long position anywhere down here, our risk would be to support. You might want to move it to the wick down here to support. And then our reward would be to a previous consolidation or a previous high. So that previous consolidation here, or even this is a major resistance area, it looks like, in the past. So our risk to reward is at 5.64. That's insane. So you might want to get in somewhere here where we're at a low already. And then you want to look for good signals to get in. So we have a double bottom here. We have wicks below. And then here we get a VWAP crossover. So we go trading above VWAP. So trades over here would be pretty ideal. And I'm going to come back to this example because there is a pretty good trade here that we can look at. And then what is my R value? So again, your risk to reward, just like I showed you. What is my R value? You want the risk to reward to be at least 2 to 1. So you want to make at least $2 for every dollar that you're risking. Me, I like to look for 3 to 1 because that sets you up for pretty massive gains. So yeah. And then I used to have a trading system. This is still a pretty good trading system, but this is just an example of how you would grade trades. So an A plus setup would be 100% of not your account size. You don't ever want to risk 100% of your account. But when I talked about my account, it would be like my options portion. So how much my wager would typically be. So let's say the maximum I ever want to risk is $1,000. Okay. Typically you want to risk 1% of your account size maximum on any trade. 1% maximum. You can go up to 5% if it's a very good setup, like an A plus setup. Okay. But I was talking about, so let's say the max I ever risk is $1,000 on a trade. Then that would be my A plus setup. My B plus setup, I would usually, if it's 50%, then I would do $500. And then for a C setup, it would be $300. And then for a D setup, I'd only risk $100. And really, you don't want to be taking D setups because this is an R, a risk to reward ratio of just 1. So that's not good at all. So let's go back to it. So an A plus setup would be something that's like a guaranteed win. There's only the chance to win. Like this setup never loses. It always rips. It's a sure winner. Okay. So this is just an example of what grades would look like. You can change them based on what you see in your setups that are bangers or whatever. But this is a sure winner. All the boxes and signs check out, all of them. It's a R4 plus, so risk to reward ratio of 4 plus. It's at a key point or key level. There's a good bar signal. There's good volume. There's momentum. There's big news on this stock. The market direction is following this play that you want to get in. The larger trend is following this play. It's with trend. It's a with trend trade. Okay, and then you can see how it goes down. Like with the B plus setup, we only have small news, but we do have a risk to reward ratio of 3 plus. We're with trend. And then there's a very high probability that this trade will be right. So that would be like your B setup. And the C setup might not necessarily be with trend, but it does have a good R ratio. So R ratio of 2 plus, it could even be 3, 4, 5, but it's not with the trend. There's no news, but it follows a pretty good setup to a T, and then we're at a key level. So that's still what I look for with my A plus, B plus, and C setups. I have C plus and C minus, B minus, and then A is just A plus. So I have these type of setups, and most of the time I'm trying to take B plus to A plus setups. I don't even look at C setups anymore. But some of the criteria have changed, but this is a really good example of what you want to be looking for when grading trades, and then how you want to be risking. So again, if it's an A plus setup, you might want to risk more because it's something that you've studied that's guaranteed. And you can't really do this. You can't grade trades and stuff. You can't know how much to risk unless you backtest and do the documenting like we talked about previously, how to mark up the charts, and you're studying these charts. Okay, so if we go back to the chart here, you can see this is what I call a breakout play right here. We have a consolidation breakout play here. You can see we're trading in this pretty nice range. We do have support down here, but then we establish a support here. So if you want to, you can just not even look at this as a breakout play, but look at it as support. So we're forming quite a bit of bottom side wicks, showing you that buyers are stepping in, sellers are capitulating. VWAP is moving to the upside. We're trading above VWAP. We also crossed up above the 20 MA. VWAP the pink line crosses above the yellow line, which is the 20 MA. And this bar right here, this is a pretty good green bar. It's a green bullish bar. But what you really want to do is you'll want to wait for the breakout above. So this is a pretty good Marubozu green bullish bar. It's a breakout of the range. So then you can have your entry here. We move to the upside. We get a retest down over here, but we bounce off of the yellow line, which is the 20 MA, and then continue to the upside. But this is a very good signal bar, and we have a lot of signs. We're trading above VWAP. VWAP crossed above the 20 MA. We have a consolidation breakout, so that's 3 signs to get in. And then we're oversold here as well. So there's a lot of signs to get in here. And then overall, on this trend, SPY is in an uptrend if you go back to the higher time frames. So if you go to the daily. Okay, but that is a good ways to get into trades, and then taking profit. Okay, so let's talk a little bit about taking profit. Let me share this screen here with you. Taking profit. All right, so take profit. Our TPs are areas that you target as a price where you want to cash out and exit your trade. Okay. So, for example, these different lines would be your take profit areas. And most of the time, take profit areas are based on previous highs and previous lows. So I'm going to share this tab here. So these lines that I have marked are pretty much previous highs, previous lows. So if we ever fall down below here, then I'll know that if we start moving to the upside, then this area would be an area of interest. Since we previously had support there, support usually turns into resistance. So that would be one take profit. And then this is a previous high. So that'd be the second take profit and then the third take profit. And take profit areas can change based on what you look at, like ATRs, average true ranges, previous highs, previous lows, VWAP, or the MAs, different things like that. Or order blocks. Some people look at order blocks, but still it would be supply and demand, support, resistance, order blocks, same thing. So when you're looking to take profit, always look at previous. So you go on your chart, and then you look back and you see what was the previous high, what was the previous low. So if we're going short, then what was the previous high, because that will turn into an area of support typically. We have to test that area. And what would be a previous low. And then also the same thing for these MAs, because when you move up, we're going to test these MAs, these moving averages. Okay. So just to keep it simple, take profit areas are pretty much previous highs, previous lows. Are key levels. So when you're trading, you always be thinking about getting in at key levels and then getting out at key levels. That's pretty much how the market moves. The market moves as like magnets. We move toward areas of interest, areas of high liquidity, areas that are key levels like moving averages, highs, resistance, supply, demand. That's it. Supply, demand are in these areas of liquidity. Thanks for tuning in to Fit to Flourish podcast. I am out. I hope you guys learned a lot in this one. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,